Good afternoon, everyone. Welcome to our Women's and Men's Fellowship meeting. Today, May 1st, it's a joint meeting, and we want to welcome those who are in the sanctuary, as well as those who are online. Thank you for taking the time to join with us. We also have our special presenter, Mr. Michael Johnson. Thanks for coming to share with us about money matters. We are so happy to have you. I am Andrea Goldson Barnaby, the president of the Women's Missionary Fellowship. So at this time, we are going to start with an opening prayer. So I invite you all to stand. Let us pray. Dear Heavenly Father, we just give you all the honor, the glory, and the praise. We thank you for the opportunity to meet together to learn more about managing our finances, dear God. We commit the meeting to you, and we pray, Lord, that all will go well and that, we leave here better equipped and knowledgeable about investing our funds. Thank you for your many blessings on our lives. And we ask, Lord, that you just take charge of this meeting. Amen. Okay, you may be seated. I'm going to ask the multimedia team just to play 2 songs for us. We Are Together Again and Jehovah Jireh, after which our brother McCoy will do the scripture reading from Matthew 25, verses 14 to 30. Okay, the first song, We Are Together Again. Can we stand together and sing We Are Together Again? We are together again, just praising the Lord. We are together again, in one accord. Something good is going to happen. Something good is in store. We are together again, just praising the Lord. We are together again, just praising the Lord. We are together again, in one accord. Something good is going to happen. Something good is in store. We are together again, just praising the Lord. Our next song is Jehovah Jireh. After 2, 1, 2. Jehovah Jireh, my provider, his grace is sufficient for me. Jehovah Jireh, my provider, his grace is sufficient for me. My Lord shall supply all my needs according to his riches in glory. He gave his angels charge over me. Jehovah Jireh cares for me, for me, for me. Jehovah Jireh cares for me. Jehovah, his grace is sufficient for me. Jehovah, his grace is sufficient for me. My Lord for me, for me, for me. Jehovah Jireh cares for me.
Okay. We're going to our scripture reading will be taken from Matthew chapter 25, verse 14 to 30. Would you please stand? Hoping that, okay. Again, it will be like a man going on a journey who called his servants and entrusted his wealth to them. To one he gave 5 bags of gold, to another 2 bags, and to another 1 bag, each according to his ability. Then he went on his journey. The man who had received 5 bags of gold went at once and put his money to work and gained 5 bags more. So also the one with 2 bags of gold gained 2 more. But the man who had received 1 bag went off, dug a hole in the ground, and hid his master's money. After a long time, the master of those servants returned and settled accounts with them. The man who had received 5 bags of gold bought the other 5. Master, he said, you entrusted me with 5 bags of gold. See, I have gained 5 more. His master replied, well done, good and faithful servant. You have been faithful with a few things. I will put you in charge of many things. Come and share your master's happiness. The man with 2 bags of gold also came. Master, he said, you entrusted me with 2 bags of gold. See, I have gained 2 more. His master replied, well done, good and faithful servant. You have been faithful with a few things. I will put you in charge of many things. Come and share your master's happiness. Then the man who had received 1 bag of gold came. Master, he said, I knew that you are a hard man, harvesting where you have not sown, and gathering where you have not scattered seed. So I was afraid, and went out and hid your gold in the ground. See, here is what belongs to you. His master replied, you wicked, lazy servant. So you knew that I harvest where I have not sown, and gather where I have not scattered seed. But then you should have put my money on deposit with the bankers, so that when I returned, I would have received it back with interest. So take the bag of gold from him and give it to the one who has 10 bags. For whoever has will be given more, and they will have an abundance. Whoever does not have, even what they have will be taken from them. 30 and last. And throw that worthless servant outside into the darkness, where there will be weeping and gnashing of teeth. There endeth the reading of a portion of God's holy word. You may be seated.
Our presenter for this evening's meeting, entitled Money Matters, is Mr. Michael Johnson. I'm now going to read a short profile. Mr. Michael Johnson is the holder of a MBA in Banking and Finance. He has a B.S.E. in Marketing and Research from the University of Technology and a teacher's diploma from J.S.E. Foster College. Mr. Johnson is the Deputy Business Development Manager and Senior Marketing Officer at the Jamaican Stock Exchange and has over 25 years experience in marketing, event planning, and sponsorship negotiations. His responsibilities include, but are not limited to, planning investor fora and conferences locally, in the region, Canada, and North America, with direct responsibility for sponsorship, logistics, site planning, layout design, and function that generates significant revenue for the J.S.E. group. His duties also involve identifying new business opportunities and working with companies that are seeking to list on the stock market and private market, as well as prepare market strategies for the J.S.E. group products and services. He is a Justice of the Peace for the Parish of Kingston since 2016. Please join me in welcoming Mr. Michael Johnson.
Thank you, Sister Barnaby. Andrew, you are going to, do I have something to change the slides? Fine. Thank you again, and good evening for those here in person and for other members of this church and friends online. I'm happy to take this opportunity to speak to you about the Jamaican Stock Exchange and opportunities that it holds for individuals. Whether you're a child, young adult, mature adult, senior adult, or just anybody who wants to look at opportunities in ways in which you can increase your earnings by a structured way that allows you to monitor in an investment opportunity that allows for economic growth, not only for yourself, but for the country as well. I will start my presentation. So, you know, it is ironic because every day we get up, we fight the traffic, and I'm emphasizing the traffic for persons especially in Portmore. We fight the traffic to get to work. Really, you know, we do enjoy what we do, but the truth be told is that if we were doing it and not being compensated, we probably would stay home, because we really also want to do it for the rewards of being paid. And, you know, when you are working for your money, there must be look at opportunities in which you can have your money work for you. The stock market really provides that opportunity that allows you to work, your money to work for you. So you see the person plowing and the money is doing the work, right? So your money must always work for you, because not all the time, especially when you reach a particular age and you no longer want or able to work, you should have money working for you during that process. So my presentation will focus on giving some information of the stock market, the steps to take to invest in the stock market, as well as opening an equity account as it relates to investing in the stock market. So I always use this image because it depicts your typical market. And the stock market is really of the same principle, where you have buyers and sellers. That's really what it is. So the general definition of a market is where you have buyers and sellers. And the stock market is no different. It's not rocket science. It's not, you don't have to have a PhD in finance or any, great things like that. You go to the market and you buy your produce. And that market is actually more complicated, I must tell you, than the stock market. I'll tell you why. So let's look at this picture. Put the picture. Right. So what we're looking at is Miss Jane Market Stall. She has multiple things there. True? So I'm gonna pick on the audience here since I can't hear persons online. So I'm going to go first to my far left to the young lady. Not yes, look behind you. Yes, you. So you tell me. It's a simple one. Tell me one item that is on that stall. Melon. All right. So I'm going to the market and I'm going to buy melon. So here I am. First my time at the market. So I go to the market and I said, I want a dozen melon. That's how melon is sold. How is it sold? Per pound. Okay, all right, see, all right, folks. All right. So, Sister Barnaby, you tell me another item that is on that stall. Banana, okay. So since I buy melon by the pound, I want a pound of banana. True? Oh, great. No, sir. You see the problem I'm in, no? All right, so how do I buy banana? A Hannah banana or by the dozen? All right. I'm not picking on you because you're the last person coming in, but so you tell me something else that is on the stall. Aki. So I buy a pound of aki, a dozen aki, or two aki. How it go right now? A Hannah aki. Oh no, Lord. Don't buy a Hannah banana, then why I can't buy a Hannah aki? That's not how it's sold. I know, come by hand. So I buy one aki. Oh, buy 12. Okay. A dozen. All right. So let's go now. So I buy a pound of melon, and a dozen of banana, and a dozen. Okay. All right. So I'll get in there. Somebody else name me one more thing before I move on. Jackfruit. All right. One of my favorite fruit. So I buy a dozen jackfruit, a Hannah jackfruit, a bunch of jackfruit. I gone. I fed up. I really leave the market. I must, because I am buying just 4 items. Banana, jackfruit, melon, and I am confused. Okay. So you realize I'm buying just 4 things, but the way in which these 4 things are sold, you have to know exactly how they are sold to buy what you need. And you don't think that's more complicated than the stock market? Really? One stall, and there's so many things. And I don't even touch cane yet. So I buy a dozen cane, a Hannah cane, a finger cane, a giant cane. How it work? So I'm tired. And I don't even start shop yet. So you see, because you know more about the market that you're in, you feel comfortable to do what you do. So you realize that it is not so complicated. But for me now, who is going there for the first time, I am pretty much as confused as ever. But now that you have educated me in terms of how do I purchase these things, I am a little bit more comfortable. So when I go to the market next time, I buy a dozen jackfruit. I mean, a pound of I give up. So I'll move on. Andrew, change. You know, and this is what the stock market is about. Because we only have what we call securities. So if you go back to the stall, where she have many things on it, we only have securities, which is really one thing. It may be in different form, but it's one thing. So you don't think it's easier for you to understand one thing than this many things with the stall. So the stock market not that hard. Can be. Because on that stall, there are so many things. And therefore, you have to be smart enough or experienced enough or just know by whatever means, learn by from somebody teaching you or telling you, like what you have done a while ago for me. So you realize that the key thing is really to have information. And it's the bottom line, you know. Because when you're making any decision you're going to buy, I want to go to the market now and I want to buy. I have to know what I want to buy, and I have to know how much a pound for this. And guess what? Andrew, I want you to go back to the stall. Because if I go back to the stall and I realize that I buy the pound of melon this week for $50 a pound, it may change next week. Hold that thought, I'll come back to that one. So on the stock market, what we do have is what we call securities. So this is really what you as investors actually will trade or buy or sell, for that matter. Securities. So we have two forms of securities. We have what is called equity, and we have a debt security. And equity is really part ownership of anything in terms of that has value. So you are part owner of a share of that company. Or let's say we use a church. And let's say the church want to raise funds. And all the elders have shares in the church. Because they are, I'm just using for the example stage, they are the owner of the church. I know all of you own it, but you're owner. But the elders are, for this example, are the owner of the church. But then you want to know, look at expanding the church. You probably want to do another upstairs where you can have more members. If the church is growing, you have a lot of land. You probably want to make a swimming pool. Why not? Or you want to, so you can have baptism in it, and children can come and relax, and you can take a little time out. But you want to raise the money. So the elders who are part owner of this now may say, okay, we want to invite you now to participate and own a portion of the church. So they will issue some of what they will have as their ownership, and that will be in the form of shares. So that is the form of equity, which has a value. Now, debt is really what you borrow. So it's really a borrow lending situation. So we do have a debt part of the stock market where where companies and individuals in that regard will have money that they will lend for person to borrow, and they pay back. But when you borrow and you pay, what you have to do? You have to pay it back. And what you have to pay it back with? Interest. That's the cost of money, interest. But you see the equity, when you give up, when you sell or invite persons to participate in terms of your equity, you don't have to pay them no interest, So all the companies you see listed on the stock exchange, and you see the IPOs and APOs, and I'll tell you what those are later. They're not paying anybody any interest. They're not taking on debt. What they're doing is inviting more people to become owners of the company. And when you own something, you share in the spoils, and I'll show you how that works. So we do have, and I remember I said to you, if the elders want to expand, so they will offer shares to the congregation or other persons, and they will raise funds. So what they will do is sell some of their shares to you, congregation, and in terms of you sell, they receive money. Right? So now you become a part owner of the church. So same principle apply. So once a company, you see these companies offering shares, they are inviting individuals to become part owner of that company. Right? So that's how it works. So when you're part owner, of course, you share in everything. You share in the up and you share in the down. Unlike everything else in the world, nothing runs this way forever. There's always going to be up, down, in between, over time. But record has shown, I am not the person, you can check it. It has shown that equity, meaning stocks, outperform over the long term all other financial instruments over the long term. And therefore, we encourage person to start. You notice I didn't say start early, start. Because your early may not be my early. Because it may be late for me, but early for you. But we're encouraging you to start. Because your time horizon for what you want is based on your own personal objectives. So once that is done, the company now becomes a public listed company. And I'm sure most of you would know, and persons online would have known as well, that almost 90% of the companies around the world started off as family-owned companies. You ever talk about you starting the garage, the bedroom, and I mean, Lassell Chin will tell you when he started Lasco, it was in a one room in Vineyard Town. I look at it now. All the major companies, all the Fortune 500 companies overseas, all the major companies in Jamaica, and you know most of them. You will hear the names of the fathers who have started them. But you can grow your business from pocket, so to speak. But to a point, if you want to now get global and invite and get larger, that you can earn more to share more with your staff and your community, then the opportunity exists where you can expand your ownership by offering shares to the public and become a public listed company. So in recent times, you would have seen that a company would offer shares on the stock market for the public to participate. And I think we had Eddie Focal recently, and it opens for the public to purchase at 9:30. And by 9:31, all the shares were sold. And person said, "Oh, I can't get in, I want." That's all right. So there's two lessons to learn from that. One, don't wait until it's open to speak to your broker. Speak to them first, early. Two, all is not lost. Because you can get it on the secondary market. So when the shares are offered for the first time, you will see you will see this thing called an IPO. And what it simply means is that it's an initial public offering. That's what IPO means. Meaning the company is offering their shares to the public for the first time. Recently, late last year, and we have seen some in this year, that there are now some APOs. And I have a prize, Sister Barnaby, for anyone who is monitoring online. Okay. So I have two prizes. I'm going to have a prize for persons in person, and I have a prize for the persons online. Anyone who can tell me what an APO is. The gentleman, I will go with the hand raised first. Yes. And check online. So that's correct. I hope the person online not hearing you. so they won't write your answer. So, okay, none online. So, no answer as yet online. And what's your name, sir? Dave? Wayne.
There is one person online.
Okay.
Open Cochrane.
Okay. And I'm going to put a disclaimer. If you're working in the financial sector or work with any of the brokers, you are not qualified for any of these questions.
There is a master stakes.
So I will put that disclaimer. So I'm a Rotarian, so they will say, be fair, be true to all concerned. So you must be true to all concerned. All right? So additional public offering. So what that means, and she answered. She got the right answer, Andrew?
She said additional public offering.
Okay, great. So we have one answer face-to-face, and we have one correct answer as well online. So additional public offering. So remember, the first time the company is going to offer their shares to the public, it's called an IPO, initial public offering. If that company already has shares listed on the exchange and they're offering more shares, it's called an additional public offering. And usually, I can tell you, it's usually a good thing because the price is sometimes a little bit lower. Not all the time, but sometimes a little bit lower. So can you imagine if the company share currently lists and it's at $10 and they're offering additional shares at say $8. If you purchase that shares at $8 in the additional public offering and the market opens everything is okay and the market opens for that additional amount, you're already $2 more on your money. Because it will be at the price at which it is trading at, and not necessarily your purchase price. So it's a good thing. So I encourage person to look at it, speak to your broker. Don't just jump and decide to do so, but get financial advice, and if possible, make use of that opportunity. So don't pressure yourself if you did not get into the IPO or even the APO, because the IPO, because that is from the primary market. The primary market simply means is the company selling those shares directly to a broker, to you. The secondary market is what the stock exchange operates. We operate a secondary market. Simply mean it's that a market that persons who hold those shares are trading between themselves. That's simply what it is. So you didn't get into the IPO for whatever reason, that's all right. If you think that based on the recommendation of your broker, it's still a good investment opportunity, you can get it on the secondary market. A little higher for price, that's all right. But I'm sure, and I'm not a financial advisor, so I'm going to put that in my profile next time. So I'm not giving financial advice, but I'm just using examples. And for instance, like Fesco that listed last year at 80 cents. 80 cents. Nowadays, I was at the stoplight and see the young man who wipe windscreen. I saw one of them doing like this. And I was curious and saying to myself, what is he doing? Anybody can tell me what he's doing? I'm throwing away the coins, some of the coins. Really, So can you imagine? If you put those coins, 80 cents, you could have bought a Fesco share. I would sell one share too, on the market. Yeah, you can buy one single Deke share. Can you imagine? My last check on Fesco, it's now trading at about $9 or $6, somewhere about $6. I'll be safe, about $6. 80 cents, and it's now $6 a few months down the road. Now that young man who did that, if he take up all of those things and buy Fesco, he'll probably stop wipe the windscreen. Can you imagine? Yes. So it happens that the company, so the investment is there for the opportunity to do so. So if you don't get in at the IPO, you can purchase that. Some person didn't get in at the 80 cents, they bought at $1. It's now at 6 times their value. So we have two types of shares on the market. One is called a common share, or sometimes we refer to it as an ordinary share, interchangeable. And let me put this clear. So sometimes I will use the word stock and I will use the word shares, same thing. Common share, ordinary share, same thing. So and we do have ordinary shares. So if you purchase a stock on the exchange, a company, and you purchase their ordinary shares to become a shareholder, you are entitled. Remember I said to you, you have the up and down. So you are entitled to the ups. So the up part is when the company makes profit, you as a shareholder, you get dividend. And I'll show you, and I'll tell you about that later. But as an ordinary shareholder, your dividend is not guaranteed. And I must put this as well. All the companies that are listed on the stock exchange have what is called a dividend policy. So you can look in their prospectus and I'll tell you what that is. There's a dividend policy there. And it's a dividend policy simply means it's telling you as an investor and a shareholder or to be shareholder how would you share in the profit? That's simply what it means. Remember, I show you the man and the money working for him. So the dividend is how your money work for you. So it gives you an indication or idea of how they will share the profit for you. I give you another story. I saw this lady and she said she purchased a particular stock. And I'll tell you, highway, the Trans-Jamaica Highway. And she said, you know, a colleague of hers saying that she shouldn't buy the stock because, boy, she don't want the stock price now move. And, you know, all of that thing. And I said to her, that person telling you, how old is that person? She said, the person about 20-something. And she's about 3 times that, or 2.5 plus. And I said, you know, but you purchase it for a particular reason, and that person may purchase it for a particular reason. So you can buy the same stock, you know, but you have different objectives from that stock. Some people purchase stock because the dividend policy is good, that the company pays good dividend. Some people purchase the stock because of the price movement. So persons, I'm going to say a little bit more on the mature side like me, would want to play it safe and buy shares that I get good dividend. That is probably part of my main objective because that's a part of your money working for you. The younger people who have time on the man and can do take a little time and a little more risk and still get the benefit however. So don't use someone else's objectives, financial objective, as your benchmark. Must use your own. And that's why you need to speak to your broker to guide you. I'll take the question at the back from a gentleman. All right. Okay.
Joseph, for the online audience, can you just use the mic,
Mike.
please?
Mike, not on.
It's on. Go ahead. Go ahead.
The question is, from my understanding, not all companies pay dividends.
All right. So the question, I'll repeat just for the record. The question is that not all his understanding is that all companies pay dividend. All companies have a dividend policy that tells you, the investor, shareholder, to be shareholder, how the company plans to distribute that profit. A dividend is an after-tax profit payment to shareholders. So they will clear all the things that they have and all the taxes and all of that, the expenses. It's paid from profit. So if a company is not making any profit, they don't have any dividend to pay. And companies will do that based on their plan, their strategic plan. So I give you a classic example. Many years ago, cement company made huge profit. And they came to the shareholders and they said, you know, we are not declaring a dividend. And the shareholder said, well, why are you making super profit? And I want my money work for me. And they said, look, our plan, there's a great demand for cement, but we need to increase our production. So we can do 2 things. We can pay the dividend out of the profit, and then what we'll do, we'll borrow money from the bank to build a new kilt, something that they use to manufacture cement. Now, as a shareholder, you want to think, is it wise for the company to borrow money? Or since they are making this profit, reinvest that profit? You look at your own business. You reinvest your profit, so down the road, you make greater profit, true? So the shareholder look at it and said, yeah, this sounds like a plausible thing, and look at it now. I think that time cement stock was about $2 something. The last time I checked, it was about $70 something now. So you see those shareholders are now down the road benefiting from these sort of things. So a company pays dividend from profit. So if there's no profit, no dividend. However, for ordinary shareholder, your dividend is not guaranteed, even though they may make profit. And we saw it recently, remember recently, where the Bank of Jamaica encourages, I'm using the word now, politically correct, encourages depositing, taking institution to withhold dividend. So the banks, mainly the banks, the NCB, the Sagicor, you name them. Why? Because during the pandemic, there was the risk. There was the risk of should there be a run on the bank for cash, they should have enough reserve. So by paying it out of their profit, it will reduce their reserve. So that was the instruction. However, some person complained and said, look, I am waiting on the dividend to pay my bill. And a lot of people are like that. So they decide to do a change. So persons who are owning less than 1%, which most of the shareholders are, they will receive their dividend. So that is so. So I spoke about the common share. So your dividend is not guaranteed. However, you have a right to go to an AGM and vote. And it's important. And persons who serve on committees here and board, you will understand the right and the importance of having that vote. Because it's a decision-making privilege that you have as a shareholder. We do offer another type of share on the market, which is called preference shares. Now, this dividend is guaranteed. Remember the common share? Dividend is not guaranteed, but you can go to an AGM and vote. For the preference share, your dividend is guaranteed. However, you don't have a voting right. And the beauty about it is what? Everybody can tell me, you can own both. It's not either or either. You can own both. You can own both preference and ordinary shares. So you can have best of both worlds. So I spoke about dividend. So it's the director of the companies will look at their numbers and determine whether the dividend is being paid. So we have what is called a dividend consideration. So when a company, and most companies will pay dividend either one of three ways. Quarterly, well, preferably mostly two ways, quarterly or half yearly. Most companies now pay quarterly dividend. So as a shareholder, you can have an idea that you have money coming in quarterly with a particular number of shares that you own. And you can do whatever you want to do with it, and I'll tell you how that can work. So the company will determine that, right? And as I said before, it is after-tax profit that it is paid from. Question?
Is there any difference in magnitude between the ordinary share dividends and the preference share?
Not. It comes back to profit. Because the preference share, you have a set percentage that you would know in terms of that fixed amount. While the ordinary shares is based on profit. So a company may make a super profit one quarter and decide to pay a particular amount of dividend. And you would see some companies, I know companies like Carreras tend to do that very often. They will pay a dividend as to regular shareholders, and they will pay an additional amount to shareholders. So it is really up to the company and the percentage for the fixed amount, and as well as it relates to the company for the ordinary shares in terms of the profit. You would have heard this word many times when you watch the news. The J.S.E index. Anybody remember hearing that statement? Yeah. We have 6 indices on the exchange. And an index is really just a statistical measurement of securities. If you have Do you have some little books in your hand? You should take one on your way in. Yes, that guide to the securities market, right. It will give you some of the definition as well. So it measures the performance of the market. An index measures the performance. It is the only common thing about stock market across the world. I'll repeat, an index is the only common thing about stock market across the world because it measures the performance. So you will see it when you watch BBC or CNN or whatever you'll see that they bring the stock market. It's an index that they are measuring. And I'll tell you why that is important in my couple of slides to come. So we operate 6. So we have the J.S.E index, which comprises of all the companies listed on the exchange. We have the All Jamaican Composite, which are only Jamaican companies make up that group. We have the Select Index, which are the 15 most traded stocks. We have the Financial Index, which are the financial companies, a group of the financial companies on the exchange. And we have the Manufacturing Distribution companies, which makes up the Manufacturing Distribution Index. Question coming, so keep corpus notes. All right? Oh, so this is what you will see on the television. So the J.S.E index goes up by 1,426 points. It's simply saying that the companies on the exchange that traded on that day, prices would have gone up. More of the companies' prices would have gone up. The reverse is that the junior market, the companies that traded on that day, not every company or stock trade every day. So that group of companies that makes up the junior market, if the prices of those companies average out lower than the start of trade or the previous day, then that index will go down. So let's use an example here. So yesterday you have church. Today is Sunday. You have church this morning. And the church was full. Yeah. So the index went up. So now we have afternoon trading and we have few people. So the index gone down. See? Simple. Less complicated than the market a while ago. Not true? So that's really what it is. So we measure the congregation in terms of the numbers. So everybody turns out, the index goes up. Then we have a low number, the index goes down. Simple what it is. So what are the benefits of owning shares? I mentioned some before. So let's look at it. Capital appreciation. And what that simply means is, remember I mentioned the FESCO stock at 80 cents? The capital appreciation. It's now trading at $6. And I can tell you then. So the price between the start price that it's listed at 80 cents, and the current price is the capital appreciation. I'm just checking. Oh, and I must tell you as well that we do have a mobile app. We're upgrading it, so you can go to the Apple Store or the Google Store and Play Store, and you can always purchase. Oh Lord, it's free. You can always download the app. Right? So I'm just looking at the price. I'm not finding it, am I? So a capital appreciation is really the price at which you purchase at compared to the price down the road. Obviously, if it goes below your purchase price, then it's a depreciation. Right? So it is called a capital appreciation. So your portfolio will appreciate by X amount. Note, however, there are two things. And I was hoping that question would come. Can you lose from buying shares, your money? And that answer to, anybody can tell me the answer to that? I would want to use the mic for this one. I want to use the mic for this one, brother. So the question is, can you lose your money when you purchase shares? And the answer is?
Only when you sell it. If it depreciates and you sell it at that point, you would lose. But if you keep it, it could appreciate in the future.
Right. I give you a prize for that. It is there. I will call it. It's close here. So you can only lose. Sister Barnaby, there's something in there for Mr. Farkas here. Don't give it away. So, if you, I give you an example, a better example. So, I purchased what I buy now at the market again, melon. I buy a dozen melon, a pound of melon at 50 cents, $50 a pound. And here comes, what's your name? Dean? D. And here comes D. And she wants melon. And I said, you know, I have 5 pounds of melon. How much melon you want? And she said, I purchased 50 cents a pound, you know. And she said, she wants a pound. And I said to myself, this is a great opportunity to make some money. So I will sell you a pound for 80 cents. Because I bought for $100. Let's use round numbers. For $100. So I sell it for twice the price. Now you went down the road and Sister Barnaby see you. And you said, okay, Sister Barnaby. And you say, you know, Sister Barnaby, because we're such a good friend, I'm going to sell you for 80 cents. You would have lost. I would have gained. Because you are selling it for a lower price than which you purchased. Same thing happens with the stock. You only lose your money if you sell lower than your purchase price. I'll repeat that one. You only will lose from stocks if you sell lower than your purchase price. So let's use it, since I'm on FESCO, so let's use the FESCO example. So I purchased a FESCO at 80 cents. It's now trading at $6. I sell it at $5. Have I lost anything? No, because I didn't pay $6 for it. I pay 80 cents. I will have to sell that share for 79 cents to lose. Same thing some people said about Wicton Wind Farm. Because it goes up and you say, boy, I'm losing my money. You're not losing unless you sell it for lower than 50 cents, actually, truth be told. If you sell it for 51 cents, you have not lost anything. So the general principle is, and you must make that personal decision. If you want to sell it lower than, you may decide, say, boy, I cut my loss and run. It's up to you. Question. Mike?
I was about to ask you, what would cause the stock to sell lower than it is?
All right,
What
great
would
question.
cause that?
Great question. That's a question. I'll give you I'll give you a prize. I give you prize. I'm generous today. You know. Today.
A follow-up question. Following up.
Yeah.
What if,
man, you're really following. You come after her. That's following, isn't you?
what if the company has to close,
All right.
and then they are offering you a lower price than you purchased the shares for? So it's like a compulsory sell. You must sell your shares, and they're offering you a lower price, because I've seen that.
All right. I'll come to your question. So I'll take, what's your name for the record? Sister Joan. I'll take Sister Joan's question first. And Sister Joan's question was, why would the stock price go down? So let me start by this saying, we at the Jamaican Stock Exchange have nothing to do with the price of a stock going up, down, left, right, center, or in between. You remember our market scene? So I wanted to buy melon. So Miss Jones is selling her melon at $50 a pound. But I don't have $50 left. Out of my market money, I only have $40 left. Should I walk away or should I bargain with Miss Jones and say, boy, you know, night a come, melon will spoil upon you. I give her all of the good luck. So, you know, when you buy something and you talk down the price. We all do it. Bingo. That's what happens. So, it is a buy-sell situation. So, the price is at $50. You who wants to buy will say to yourself, or your broker, or whoever, I want to buy this share for 45 cents or $45. So, look, so let me go back to the FESCO one, since that is real numbers. So, I purchased a FESCO share at 80 cents. It's now trading at $6. You're interested in buying the FESCO share. So you said to your broker, boy, I want to buy some of the FESCO shares for $5. It's selling at $6. I want to buy at $5. Now, I have school fees to pay. And I said, you know, I bought this at 80 cents and it's now at $6. And school fee must pay by next week. So I want this money quick. So what I went to do? I went to sell it at the $5. So what happened to the price? It moved from 6 and it got down to 5. If that's what happens for the day and that's the only trade, what you will hear on the news is that FESCO price went down by $1. Bingo. So it is the buyer and seller who determines the price. That's why it's called a market. So if the stock is in high demand, and I'm selling, and I said, boy, you know, it's in high demand, I want to sell it for $7. But because when your broker said to you, no, this price of the stock, with give and take with oil and what is happening now in Ukraine and this place, and every day you got a gas price goes up by $4, but it comes down by 20 cents. So it may be a good bet. So even at $6 or $7, it's still a bargain. So buy it at the $7, so the price goes up by $7. So the report will come. Trading today, the FESCO price went up by $1. It's now trading at $7. We at the stock exchange didn't have anything to do with it. It's you and the man from Timbuktu. So that is it. So I will deal with brother Dan Rimple. Oh, you are the gentleman I was supposed to see. Okay. So, and you're saying what happens to our forced sell. So, the Jamaican Stock Exchange does its best to protect investors. So one of our rules is that if a company, for whatever reason, whether it goes bankrupt, whether a parent company who don't want it to list anymore, whether just the owner of the company just don't want to list anymore, or for whatever reason, wants to remove itself from the market, which we call, the word we use for that is delisting. They want to delist. They will offer current shareholders a price. It depends. It varies. I give you 2 examples. Recently, and some persons still have flow shares, cable and wireless shares. People still have cable and wireless shares. Unfortunately, it doesn't trade anymore on the exchange. So if you don't sell it to the price at which it is offered, it has no value to you on our market anymore because it's not trading. So even if you're getting a lower price, if that's the only price that you have to sell, and in most cases, it would be above the price at which you have purchased. And what we learned today, so if you don't sell it at the lower than the price that you purchased it at, you're still a winner, eh? And using that word as I just said, a winner, this is the same report that comes at the TV. So they will say the winner today is FESCO because it traded at $7. And they will say the loser today is cable and wireless because it traded lower than the price. And that's just a simple thing. So a stock opens at a price on a particular day, each day. That's the opening price. Whatever, when that stock trade, if the price goes up or down, at the end of the trading day, it will read in terms of the report. Whether it goes up, it's a winner or advance. It goes down, it's a loser or it declines. No rocket science. See, much simpler than the markets we talked about earlier. So the dividend paid from after-tax profit, as we mentioned before, and of course you can use that money now for saving option. Now, do I have a slide on that? I think so. We have what is called a mandate. So any of you own shares, I don't know, people in the online will say that, and they can hold up their hand because we can't see it. People don't tell you that they own shares, you know. They don't want you to know. So we have what is called a mandate. A mandate is really an instruction that you give the company registrar. And a registrar is just a company that manages the shareholders for that listed company. You give them an instruction by filling out a form that says to them, I want my dividend for this particular company to go to my credit union. My dividend for this particular company, I want to go into my savings account. The dividend for this particular company, I want it to go to my building society. So you won't get a check anymore. We're trying to save trees, eh? And it's much more efficient, and it's much more streamlined, and it's quicker. We do have people who still don't collect their check. It's still their money. Don't collect it. However, I must tell you, you cannot lose your dividend. Once it is paid to you as a shareholder, if it's 10 years down the road, you still have it. Even when the check is expired or whatever you call it. Stale dated, yes. Moving right along. because it's not the company's fault like it's stale dated, you know. It's your fault. So why would they want to pay you? They're not waiting. No, but you must put it to work. Make sure you collect it. So the mandate helps you for that because that money will go straight to your account when it is paid. And they will send you a notice where that is concerned. So that helps your efficiency and it helps you as an investor to structure the funds that you get. So if you have if you invest in a stock that is pay good dividends and you want that to go to your pension or to school fee or to your mortgage or whatever, you could do a mandate for that money to go there on a quarterly basis. Buy more shares you have, the greater your dividend. That's how dividend is paid. The more shares you have, the greater your dividend. Because it's paid per share. All right? So, the stock exchange, you know, and you will probably hear the different ministers of finance will always put a plug in. I'm going to use that word. Put a plug in about the stock market. Because it does help the economy. It does. And in no simple way. And I'll give you one example. In 2009, when the junior market started, Access Financial was the first company to list on the junior market. At that time, they operated 4 branches island-wide. So your maths is good and better than mine. So let's use some simple numbers here. Let's say it takes 10 persons to man each branch. So they have 40 people employed. Access Financial, as when I checked the last time, had 17 branches island-wide. Use that same number and tell me how many people employed. So let's look at the spin-off. More people employed, what happened? You name it. It's a no-brainer, eh? More goods and services. So for each branch, let's say you manufacture desks. You used to supply them with desks for 4 branches. Now you have supplying them desks for 17 or from that left 13 more. And do the other things, the stationery, yada, 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 yada. It adds up, eh? So you see the economic growth? So increase in production, the growth in the economy, and of course, because of people getting more money because they are employed, more people are employed, and you as an investor invest the money, you're getting more dividend. So you having. So really, that's how the stock market helps the economy. It's not just we don't, what do you call it now, 40 Harbour Street twiddling our thumb. All right? We operate 4 markets. And currently, this data is current. We have 95 companies listed and 141 securities. Now, any smart person, I know all of you are smart, but the smarter of the batch, of the group, can tell me why do we have 95 companies listed, but 141 securities? And that answer is, if you win a prize already, you can't win another. Because I don't have many. I'm Santa Claus. Question? Repeat the question. We have 95 companies currently listed on the J.S.E, but we have 141 securities. And I'll give you the answer. School challenge. Bzz. Because we have companies that have more than 1 securities. Remember I spoke about common shares and preference shares? So a company that has a common share can have multiple preference shares, but they can only have 1 common share, or ordinary share. So I'll give you an example. JPS. JPS has about, one company, they have about 5 or 6 preference shares. JMB, one company, they have 1 ordinary share and they have about another 4 or 5 preference shares. So you see that preference share, that securities, so it is called securities. Remember when I started, I said it's a security that we trade? Right. So we only have securities, while Miss Jane have multiple things on her stall. Confusing me still, but I'm working with it. We do have a junior market, which are medium-sized companies, and lots of them, and I mentioned Access a while ago, is now $1 billion company, as well as quite a number of them. We have a US dollar market. So if you want to purchase your shares, you say, Jamaican dollar now say nothing. I want US dollar, I want trading. We have that market for you. And we do have a bond market. Remember I spoke about debt earlier? So that's where the debt is traded. Things to know when investing. So and I'm sure like most of us, even our great-grandparents never tell us that pandemic and how it's. You know, when and show your hands. And both persons online, show your hands as well. Probably, and I'm looking at brother, I'm not looking at anybody. Would remember the 51 star Charlie. So it's when Gilbert come, and we hear hurricane come every time, everybody want hurricane, we want to see hurricane, we want to see hurricane. And when Gilbert come, we don't want to see no more, you know. But it was an experience, true? But and COVID now, nobody don't want to see no more COVID. 1 year about pandemic, and we see the people that walk up and down. You see like black and white picture, them don't have color them time there. Black and white picture, people are wearing masks. We said, show them foolly. And look down now. So, the condition as we know it in life will change. And the Bible speaks about it, and everybody talk about it, and everybody talk. And we only can prepare for what we know about. And you know the strangest thing about it, you realize that since we had Gilbert, our recovery of essential services is almost instantaneous. We don't have this long lock-off of water anymore, or light, or internet. Why? Because guess what? We have experienced it. You realize they're limiting the number of wooden light posts to concrete because of the wind factor. You know what I mean? So we will learn from COVID as well. And there are going to be things that the new normal is a new word, the buzzword. Eh? So we're doing things differently. I see the XM on the chair. On the benches. And I bet if I visited in 2019, I would see any X on it. And it's space out, you see, one person. Watch it. We're living like strangers. Yeah? We don't hug and touch again anything. Well, I tell you, it's COVID. So what is happening that we have to plan for only what we can do, what we know about, or what we expect. So the condition of the environment, the war in Ukraine, you're talking about logistics challenges, and we feel that in our pocket when we go to the supermarket. And we feel it at the pump when we go to buy gas. But a lot of times I will say to persons, read and get advice. And the beauty about this is, I tell you, remember when I went to the market, I didn't know much. And if you guys weren't able to educate me before I go to the market, now when I go back next week, Saturday morning, I can know what to do. Because I used to buy a dozen melon, you know, and like my wife used to say, why you carry home so much something? The money done, you never buy no banana, you never buy a hand of banana or 2 bananas because you buy a bowl of melon. But now that I know, I will walk in confidently and do what I need to do. So, get advice. So I got some from you, so I'm giving you some. Get advice. You are good at what you do. Remember, we talk about fighting the traffic in the Portmore traffic and fight it for our work, to earn the money. You are good at what you do. Let those who are good at what they do advise us. You don't have a toothache and go to your mechanic. Well, you may try it, but it's not advisable. You don't want to make a dress to come to church, and you go to your barber. Or a suit, and you go to your barber. What am I saying? Get advice from the experts. That's what they do best. You do what you do best. And that is why they do what they do, and you do what you do. So you earn the money, they have a duty to do what they need to do. And remember, you know, it's advice. Always, it's just like you go to your lawyer, you give them an advice, and they give you go to the doctor. Some people take what the doctor says as gospel, and they don't get a second opinion. But it is an advice. Get advice. Same way that you go to the doctor or the dentist or the pharmacy and get advice, treat your money same way. Get advice. When you're not certain about many things, it is always advisable to go in at ankle height. Don't see the water and say, boy, you know, boy, it look nice. And you jump off and you say, but I can't find the bottom. And then they have to pull you from the bottom. So start, and your small is dependent on only you. You know what your small is, so you can determine what your small is. I can't determine it for you because my small is maybe smaller than your small. Or small. See what I mean? So that is your determination. And everything starts with a sacrifice, because guess what happened? And I speak for myself all the time. Don't have money put on to say, boy, you're going to do this and you're going to do that. Because money have a mind of its own. You have a plan to get the money yet, and when you get it, and when you plan for it gone, you don't know. How much time that happened to you? Many times. You say, boy, you know, so me I'll get a partner job, or me expect to get some back money, and me I go do this, and me I go do that, and when it come, all the way you plan to do. And you say, how where the money gone? Money have a mind of its own. So you have to make a sacrifice, give up a little of this and do a little of that for down the road, So a trade, and I'm coming to the end. So a trade takes place on the stock exchange. When our sister here spoke about what happened to the price up and down. So you as a buyer, so the general principle is that you buy. Let's hear it from the choir. You buy low. You buy low. And you sell high. I'm moving right along. So the market there's what is called a market depth. And that simply means is that for any day on the stock market, any stock that is traded, on any trading day, the stock market here in Jamaica trade 5 days a week, Monday to Friday, 9 a.m. to 1 p.m. On any day between that hours, any stock trading on the market there are multiple prices. Some of them, I'm going to say, is ridiculous, but they are what they are. Multiple prices. So that is what is called market depth on both sides, because you have persons buying at various prices. And for the market depth, I will just tell you that the stock exchange has what is called a circuit breaker, and it's a simple thing. It means just that on any given day, a stock trade 15% above the opening price or below, it takes a pause. So on any given day, a stock can trade 30% up or below, but it will take a pause at the circuit breaker when it goes 15% above. We have an electronic trading platform, and I want to tell you this, and it may sound strange. Our electronic platform was put in place before the New York Stock Exchange, you know that? You may see it on television sometimes. Yesterday, they show you the New York Stock Exchange platform, and you see a lot of people crying out. That is what is called an outcry. We used to have it many years ago here, but it's not efficient. But they do have now electric, but they still keep that as a tradition part of their thing. But it's not efficient. And what happened in those times is that when it wasn't in electronic form, so we don't have, we're trying to reduce the number of share certificates. The paper one, you see the paper, your shares on it. If you have any, take it to your broker. If you know anybody have any, let them take it to their broker. To convert that to electronic form. Just like how your banking is electronic now, same thing happens. You will have an account with your certificate, with your stocks electronic form, so you can monitor it online, you can know what is what. It's more efficient, it's seamless, and it helps you better to know what you have or don't have in that case. Right? So the electronic form certificate, what used to happen many times, let's say somebody lives in Montego Bay and they have shares and they want to sell, they have 1,000 shares unit on that particular certificate, and they only want to sell 500. What used to happen is that share certificate have to come to Kingston, Flatbridge Black, we didn't have 2 of them time there. So everybody have to come to Flatbridge Black, them have to turn back. 2 days pass, can't get the business done. See? Business spoil. School fee for pay, mortgage for pay, medical bill for pay, business spoil. So the electronic form, they can stay anywhere in Timbuktu. We have persons, we have probably closer, you name a country in the world, we have persons trading there on our exchange. Because we do have an online trading platform that you as an individual can trade for yourself. You don't have to wait on the broker. You can do it yourself. Settlement cycle. Settlement cycle is a T+2. And what does that mean? 2 days. 2 days as a buyer for you to get if you're going to buy, to get the shares in your account, and 2 days as a seller to get the cash in your account. T+2. Question. Mike. I have them under control, no, Sister Barnaby. You see that? Yes, sir.
Yes. You don't have to have a broker to trade online?
You have to have a broker account. Because
Okay.
the money under your mattress is not linked to anything than your mattress.
Right.
True?
Okay. So you have to have a broker account.
You have to have a broker account. And that's where the broker comes in. So you have a broker account. It's a J Trader Pro.
Yeah.
It's our online platform. So you open a broker account, you can assign it to a broker. I think now we have 15 brokers. I think there's about 7 or 8 of them that are on it now.
Okay.
So you will link your account to that. So you can fund it by selling stock and that fund comes to your stock, or you can fund it by transferring funds to the broker and he will fund the account. And when you sell, that fund goes back to that account, or if you want to collect the cash, you can have them transfer it back to your account that you would have transferred from. So, it's sitting in your living room or on the beach. You can do all of this. Money working for you while you're taking in the sunshine. All that sort. Right? So you don't have to do a lot of the legwork. It's there for you already. We have everything electronically. So we have 15 brokers, and most, if not all of them, have the same requirements. You know, the know your customer form and all those other things. Proof of address, proof of income, yada, yada, yada. And they will tell you. And you provide them with instruction. You instruct your broker. If you have an online account, you can do it yourself, right? And the broker will execute the trade for you once you have completed that process. And here is a list of the brokers that we have. You would have our two newest brokers are QMax and FHC Investment. And persons who have probably First Heritage Credit Union, you know, they are now have a broker license, so they can. So since your money is linked with that now, you can. You don't have to worry yourself now. You can just trade the money from there, transfer it to your account. All right. And I put this slide up, and you'll notice I have Spur Tree and Fesco at the bottom, because when this was done some time ago, Fesco opened at 80 cents, and it went as far up as $8.18. Your math is better than mine. Spur Tree the same, started at $1, and those are just two. And you look at the other companies that are there now. You know, Grace Kennedy is over $100 plus. Right? So you can see. Next. My dividend slide not there. Okay, keep it at that one. Remember, I spoke earlier about the index, and I said that is the only common thing on the stock exchanges across the world. Well, because of that, the Jamaican Stock Exchange was the #1 performing exchange in the world in 2015. Yeah. Bloomberg tracks the performance of 94 exchanges across the world. You name them, the Japan Exchange, the London Stock Exchange, all these big, New York Stock Exchange. We beat up the whole of them, 2015. Outperform all of them. So had you, dollar for dollar, had you invest your money, same amount, across, you would have gained more money from us. And you know, when you do things for the first time, what them call it, and you look like you can't do it again. What the Jamaican word we call it? Buck up. Yeah, what's that a buck up? We do it again, 2018. And 2019, before the pandemic, we were in the top 5. So it's a plan, eh? So you see our market has been growing significantly where that is concerned. And it's simply because of what we're doing here now, you know, educating persons about the market. So persons are getting more comfortable than to go into the Coronation and the Spanish Town market, where the thing is like a high science, where you have to know how much you buy pound. You don't buy pound, you buy finger. You don't buy finger, you buy weight. You buy a pound a cane. You know what I mean? Next. That's it. So I hope I've confused you enough. So your sister, my market is not as hard as Miss. So I'll take any question if there are any. If there are none, I have a few for you. What do I have left?
I have one question. Why is it necessary to have a broker? Because the broker to me seems to be a middleman.
Why is it necessary?
To have a broker.
Okay. It is necessary to have a broker because there are two reasons. One, even if you are financially savvy, unless that's your 9-to-5 job, you don't have time to manage and monitor what is happening with the companies, reading all of their financial statement, looking at how they are, if they are performing efficiently for a particular quarter after quarter. How much company we say we have listed? 95? And you want to spend your time watch 95 companies' quarterly report. So you see where the broker come in? That's their job. So that's one. For simple reasons, it's just that to provide professional license advice. You don't have to take it, because at the end of the day, it's your money, but to provide advice to you. That's one. Two, as I mentioned before, that's a conduit to the exchange. The stock exchange, really, our customer, the truth be told, our customer are the brokers, not you. You are the broker's customer. So you see where the linkage comes in? So you to the broker, to us. The broker to us. So that's where it comes in, right? So that's pretty much, they are the conduit to manage the trade. And before the online trading platform, you then, that's our system that you have to go through the broker for that purpose.
I have a question. What if your broker falls short that he's not managing your money well? Is there any form of compensation to be accountable because you're paying him, he's getting a commission when your money makes money?
All right. Andrew, you want to go back a few slides and let me bring up, Andrew, go back a few to my broker list,
Why I'm asking this at an experience where I had an investment and they had invested in stocks, and it's only because I wanted some security and I checked it, I was losing like $3,000 a day.
Go back to the picture one.
And
the picture
my
one, Andrew.
management didn't have anything to say or to guide me to move what
All
to be
right.
done.
So what happens if your broker is not performing to your liking? I used to use an example for that, you see, but then somebody say you must stop it because one wife you have. I used to say treat your broker like your wife, but because you can have many brokers, but you must only have one wife, I'll stop use that one. 15 of them to choose from. And that's why when a person asks me, who is your broker? Which broker is the best broker? Broker for me may not be the best for you. So it's a relationship. And I always speak for myself. I have a word for probably 5. And it's just probably for various reasons. And I can tell you, because so if the broker is not performing for you, fine, choose another. And then when you going to choose that one, you say to that one, why I'm coming to you, because that one is not performing for me. So guess I'm telling you what happened. The same thing happened. I have 13 more to go. Simple. If, however, we do operate, the stock exchange manages what is called a compensation fund. So if a broker, for some reason or the other, goes bankrupt and you have equity there with them, the compensation fund will compensate persons to probably not 100%, but there is something to get. But as I said, the broker are there to assist and to advise. You must make that decision. If you're getting the service or not, then you may need to look at another where that is concerned. And to be honest to you, most of them try very hard to. Any question online? No? No question online? Sister Barnaby, check if any question online. Okay.
Or can I invest in a company?
Okay. Good. As I said before, you start with a broker. So my list of 15, usually, I always say to person, if you're going to buy, I want to find something simple. If you're going to buy a shoes, or if you're a farmer, you want to buy a water boot. You're not going to just get up and buy a water boot, so because you must know somebody else in the farm, not true? Or if you're going to buy a car, you know somebody else with the car that you want to buy. You know somebody else who would have a car like that. And what you do with them? You quiz them. It's efficient. You get good mileage. How you find parts for it, which are critical information, not true? It seems like a broker, So you want to find somebody now who say, you have a broker, who you rate him service. Your sister said a while ago, she have one. If you ask her, she'll say, me not recommending that one. So find a broker that will work for you. And as I say, we have 15 of them. Usually when you're buying the buying principle remains the same. Anytime you're buying anything, you go from memory first, or you go to somebody who you know and trust their judgment. Not true? Because you don't have all of the information. But if somebody have that experience, you want them to share that experience with you. And if it's a good, so somebody may say, boy, my broker sell off, me recommend them anytime. That's where you start. Once you do that, the broker will then guide you in terms of what documents do you need to provide to bring to them to open a broker account. We have brokers in that 15 that don't take a cent from you to open a broker account. We have brokers on that list will take $10,000 from you to open a broker account. We do have brokers on that list that will take a minimum of $1 million to open a broker account. But guess what happened? It's like we're going to watch it. So while we're here going to watch it, everybody on this side drive them one car. Everybody just go up on a bus. But we have got Duns River Fall. Ray outing. Which is the destination, but we're choosing different vehicle to go there. Not true? So guess what happened? What is your objective? If your objective is to provide, get some savings, retirement money, school fee money, what have you, the broker will take you there. But all them will do the same thing. So the broker that will open a $1 million account for which requires $1 million, he will take you there. The broker who's going to start with the $10,000, he will take you there. It's up. You must find that drive, that avenue that suits you best. So again, just identify and find a broker. Usually the best route to start, my friend, is to find out from friends and relatives who have a broker, find out what the service is like, because that's the truth, They will give you an honest opinion, and you can then make your decision from that. Normally you want to narrow it down to 1 or 2 or 3, and then you take it from there. Cool.
I came in a bit late, so I don't know if you had mentioned it. What I found out is that investing in stocks is a long-term investment. So if you have money to invest, it shouldn't be money you want to spend tomorrow.
True. And you notice that I saw that pause when you said that. Because your long-term may not be my long-term. I don't know if you everybody on social media now. So you and let me share a video. You ever see some young men a party and them a burn money? You ever see that video yet? If you don't see it, I can send one to you. $5,000 bill them having one thing a burn money. And none of them have reached 30 yet. Whole heap of money them a burn. And I use that example to say simply this. For them, they don't, this is my understanding of it. They don't see long term in life. So they might live for the now. So the long term will be based on each person's own financial time horizon that they want their projection. I know a lot of persons, and again, your investor would advise, your broker would advise, and you must also, as an investor. There are some persons, let me say this, there are some persons invest for various reasons. So a person will invest and say, when I purchase a stock, I only want to make 25% margin on my money. So you see the person who bought the first squat 80 cents, when it reached 25% of his money, him gone, him sell it. Him no business, he could have got to $100. That's all right. Him not greedy. Him moving on to something else. Because he meet his own objective. And that's just, so they will put a lot of money for the short term and whatever. So you must determine what your objectives are based on your own personal goals and your age, your health, all of these things, your children. And you can buy shares for your children here. Good Christmas present. Good Christmas present, trust me. Good, they will love you for life. Well, I mean, you know what I mean. But it's a good present, right? So, if there are no other, I have. All right, so I have 3 items, and for the persons who are here, that stays, that because you're here on a Sunday evening when you should be home watching basketball and having ice cream, I'm going to give 2 gifts here and 1 online. So, questions are by show of hands, and if you have answered a question and you're getting a prize already, then you're not qualified. First question. How many markets do we operate at the J.S.E? You get a prize already? Okay. To the mic. First answer right or wrong. Sister Barnaby, you're the judge.
4.
I was going to say name them, but that's all right. That's correct. But you can name them by the chance. Just for the record.
Wow.
All right, don't pressure yourself.
No, brain gone already. No, I don't remember all 4, but I know I said 4. Stock market.
Don't lose the prize.
J.S.E.
Don't
All right, don't lose.
Don't lose the prize. Don't lose the prize. Anybody can help him? Junior, Bond, US, and Maine. And because you help him, I won't give you a prize. So that's a 2. So, and online, Andrew can help me with this one. And this one is easy. The J.S.E. No, I'll give you this one. I'll make it easier. How many companies do we have listed on the J.S.E? And that one is online. Who is that? Julian Small, you're right. Whee! So, for the persons here who have won prize, now come to receive your prizes, please. Camera. Paparazzi. So on behalf of the Jamaican Stock Exchange, I'd like to take this opportunity to thank you for having me. And I hope I was able to at least give you some insight and know you're a little bit more comfortable with understanding and the information. I know it's a lot, but guess what happened? I've been there, my boss here, I probably said too long, but anyhow. And I'm still learning. So it's bit by bit. Don't take off more than you can manage. But guess what happened? If you haven't learned anything, I'll leave this with you. Get advice from the professional. Don't let your tailor tell you what him do. He might own shares, but I'm not a financial advisor. I work at the stock exchange and I take financial advice too. That's not my job. So take advice. Best thing that can be done. All right, thanks again.
At this time, I'm going to be inviting our Assistant Treasurer, Sister Joan Campbell, to do the vote of thanks.
Mr. Johnson, I need you back here. On behalf of the Portmore Gospel Assembly Fellowship, men and women, it's a pleasure to have you here today to give us this talk. I'm sure we have benefited, and other persons will know how to invest, and it will be some benefit in their life, whether young or old, because I have learned a lot today, and I think I'm going to go and revisit my financials and see what I can do. So we thank you for your information that you have imparted us today, and for taking such time out to give us all the nits and the grits. So we have here a token from us to show our appreciation to you. Thanks for coming.
Paparazzi, I forget you still there.
So once again, we want to thank Mr. Johnson for taking the time to share with us this evening. We had over 40 participants online, Mr. Johnson, and various comments, very informative. People want to know how to get in touch with a broker and stuff like that. And so thank you once again. Thank you for those here, who took the time out to be here physically. We really appreciate it. All right, so at this time, we're just going to close in prayer. So I invite you all to stand as we close in prayer. Dear Heavenly Father, we just thank you for this time that we were able to spend learning more about the Jamaica Stock Exchange. We pray, Lord, that you just help us to be good investors and good stewards of the resources that you have provided us with. We commit the Jamaica Stock Exchange team to you, Brother Michael Johnson, and all those who are working. We thank you for the exceptional work that they've been doing over the years. We thank you for all the opportunities that they provide for our country. So, Lord, we just commit them to you. And, Lord, we just ask, Lord, that you just continue to lead, direct our paths. All these mercy I ask through your Son, Jesus Christ. Amen. All right, so thanks again, and we look forward to our next meeting, and enjoy the rest of the evening.